So this is day 5 of the quarantine. I finally caved and decided to go to the grocery store today. And I saw this canned soup that was $2.77 each. And I was like, hell no, I ain't buying that. What am I, made of money? Hi, my name's Andy and you're watching Andy's Fire Club. So, welcome back. Another bloody day in the market and another day of quarantine. So, I'm going to start off by showing you some of the memes I've been working on while I'm stuck here in quarantine. I think I'll make this a permanent feature of this show just to show off some of the memes that I've been making. I think they're pretty funny. You guys should definitely subscribe to see more. And also be sure to follow me on Twitter and Instagram. That's where I'll post some of them. So links down in the description for that. Also, be sure to give this video a thumbs up and consider subscribing if you like this series. So I got this new recorder thing, in case you're wondering what I'm holding here in my hand. So hopefully that'll improve the audio. So let me know if you guys can hear a difference in terms of the audio. So wow, things escalated quickly. Things escalated really quickly. I think the market was down another, I don't know, like 5-6% today. I know the circuit breaker tripped again. So this is happening so often that I don't even feel it anymore. I'm like, oh, another day, another circuit breaker trip. And of course, this is due to the outbreak that's going on, and it's just crashing the market more and more every day. And when the crisis first began, during that first big drop, I made that video. I'm not sure if you guys remember, on saying what to do when the market is crashing. And in that video, I described the story where a friend asked me if she should sell any stocks, and I told her no. I don't know if she took my advice or not, but if she didn't sell any stocks, she probably would have lost a lot more money by now. So to that friend, if you're watching this, I'm sorry. But the thing is, I can't control the stock market and I couldn't predict where the bottom is. And I don't think anyone can predict where the bottom really is because, that market crash, that initial crash back in February, it could have been a one-time thing and the market could have bounced right back up, or we could have experienced what we're experiencing now, which is the markets continue to slide. I've never been good at predicting short-term trends, and I just think in the short term anything could happen. So I've just tended to avoid trying to really time the market. So I think that part is still true for me today. I don't try to time the market, and I don't try to time where the bottom is. I like to just hold my stocks and average down on situations like this when the market's in free fall. So I know in the short term, I might look like an idiot, right? And which I do because my portfolio is down quite a bit. But really, I'm not worried because I feel like the stocks that I put my own money into are good companies and that will eventually weather this storm. So I think right now we're in the midst, we're in the eye of the hurricane, right? So we're in the biggest part of the storm. And things are just going to look worse and worse for the extremely short term, for the next few weeks or something like that. So a lot of the bad news is being priced into the market as we speak. So I think in the short term, markets might crash even more. And if it does, you know what? I'll still be a net buyer of stocks. So I still believe in buying when everyone else is selling and selling when everyone else is buying. So I think this is one of the situations where you should be a net buyer of stocks instead of panic selling out of your position. Anyways, that's just my opinion. So I'll continue to stick to my strategy and continue to buy stocks as they become cheaper and cheaper, which is something that I'm actually super happy about. So I'm not worried at all. And for those people that are just, permanent bears and they're just saying, oh, the market is going to crash and then now they're all happy because they were right. Well, I think eventually they'll bounce back and they have to decide when the bottom of this whole market thing is. And if they time it wrong and the market ends up surging back, well, then they're going to lose a lot of the money, right? So I see this all the time where people jump on a trend, right? Whether it be up or down. So I think when Tesla was going up and away near $900 per share, people were jumping on the bandwagon, right? People were buying Tesla at $900 a share and thinking that it will go to like 2,000 or 3,000. I think one day maybe it will go to that level, but in the short term, I think it's pretty unlikely for Tesla to hit like a $3,000 mark even before the coronavirus outbreak. So all those people that jumped in at 900, well, they're probably getting wiped out now, right? And same thing on the way down. If people are buying all these like put options and all shorting the market and all this stuff, and right now they're doing really well. but you don't know when the bottom is, right? So if we hit the bottom and the market starts bouncing back up, well, all these people that hold like hundreds of thousands of dollars worth of put options, I think they might get wiped out completely, right? So I think there's risk when you bet on the short term, and I just tend to not play these short term trends. And as it crashes, my portfolio, it looks like I'm doing worse and worse every day. But I think in the long term, I'll be on top. So that's all I wanted to say regarding that. But in the short term, I do want to maybe change up my strategy a bit, because I think if this turns out to be a full blown recession, then we're really going to have to pick companies that can really weather the storm and can weather an actual recession if a recession would hit. So, for example, I know last video I mentioned that I was buying Carnival Cruise stock, ticker symbol CCL, and I think a lot of people are kind of uneased because CCL keeps on crashing, right? I think today it actually hit under $8 a share. So I think my cost base is somewhere around 18. So I've lost like almost half of the position that I put in. And I know a lot of people who started buying the stock super early, like way earlier than me, they are obviously down more than 50%. So I think when you look at a Carnival Cruise stock, they people are throwing around the word bankruptcy a lot these days when it comes to that stock, right? So I don't think personally that they will go bankrupt, but there's always a chance, right? And for companies that are the hardest hit, like a Carnival Cruise, or for companies that just don't have that great of a balance sheet, meaning that they don't have that much cash or they have a lot of debt compared to their current assets, those companies might go under if there is a recession. So I think the way that I want to change up my strategy is to focus more on quality stocks. As the market crashes, there's good deals everywhere, right? So right now, I think you can literally throw a dart at a list of stocks and still make money. And that's because everything is on sale and everything is crashing. Most of the companies I will talk about today have more cash than total debts. So not only are they able to pay off their current liabilities, which are debts that are due within 6 months, they also have enough cash to pay off their long-term debts. So before I get into these stocks, though, I just want to have a quick disclaimer, because this is just my personal strategy. Now, this is not financial advice. For proper financial advice, you need to speak to your actual financial advisor who can give you a personalized recommendation based on your personal circumstances. I'm just some guy on YouTube, so please don't just blindly copy me. I'm just telling you what I'm doing personally for my portfolio. And by the way, I'm not telling you to buy any of these stocks, by the way. This is not a recommendation to buy any of these stocks. This is just personally what I think might be a good idea. So I could be wrong. So again, don't blame me if you lose money. So with that being said, let's jump in. So stock number one is Alphabet, or as they're more commonly known as, Google. So why did I choose Google? Well, I think Google has one of the best balance sheets on all of Wall Street. So if you look at Google's balance sheet, they have almost $120 billion in cash. They have only $15.9 billion in total debts. So they actually have way, way more cash than total debts. So if a recession were to occur, I think Google would do very well, because they're not at risk of going bankrupt anytime soon. And I think that these days, as more and more people work from home, well, then they're going to be using Google services more if they weren't already, right? So if you're at home, then you're always Googling stuff, you're watching stuff on YouTube, you're doing all these things that are part of Google's core business, which is online advertising and online services. So I think Google just has their hands in so many aspects of our lives today. If you think that they're just a search company, well, no. They have areas of their business like autonomous driving. They have they're with Waymo. They have their hands on everything. I mean, honestly, Google controls everything, right? So I think that Google is trading at a much lower valuation than they do usually, right? So I think that if the stock drops below, let's say $1,000 a share, it's a pretty great buy. So if you buy the stocks at less than $1,000 a share and you just wait for, I don't know, like 5 to 10 years, just don't focus on the short term of what's happening with this outbreak and with this crisis. Just focus on the long term and wait like 10 years. And I have a hard time believing that you won't make money after 10 years. So that's why I chose Google. Now, stock number two, I picked Royal Bank of Canada. Now, Royal Bank of Canada, maybe I'm biased here, but I did have a co-op term with them when I was in university. And in my opinion, Royal Bank of Canada is just the best run bank in Canada. So Canada already has one of the best banking system in the world. And don't take my word for it. You can, of course, Google it. But Canada's banking system is very robust compared to some of the other countries. And out of all the banks here in Canada, I just feel like Royal Bank is the most technologically advanced out of all the five big banks here in Canada. And when I was working for Royal Bank, I was part of the development team where they built technologies for their contact centers. So a contact center is what is the people that answer the phones when you call in. So if you call in to I don't know, check something on your account or open an account, or just if you have some sort of dispute, or if you want to cancel your credit card or open up a new credit card, those are the people that answer the phones. And the technology that goes behind it involves routing this calls to the right agent and then giving the agent the tools to be able to pull up your information and make proper decisions and be able to properly help you, right? So, and also the contact center, they have this technology where they use voice recognition. So if you called in before, they'll have a profile of your voice. So if someone else calls in and pretends to be you, let's say you get your identity stolen and somebody pretends to be you to call into the bank to transfer money out of your account, well, then their voice won't match yours. And the bank will flag it, and then they'll ask additional security questions before they let that person do anything. So it's just all this technology in the background that you don't even see that RBC is doing. And I'm sure other banks are trying to do the same things as well. But I just think, in my opinion, RBC is one of the best, is the biggest bank in Canada, and is the best position to weather a recession if a recession were to occur. And so, regarding the balance sheet of RBC, we can see that they have $580 billion in cash and $358 billion in total debts. So again, they have more cash than total debts. Now, this is not exactly rare in banks. I know a lot of banks have more cash than total debts, but investing your money with the biggest bank in Canada is a pretty safe long-term bet. And bank stocks usually are less volatile than other stocks. So if you're one that's risk averse and you don't want to run the risk of wild fluctuations in your portfolio, having a bank stock in your portfolio as one of your core holdings will probably help alleviate some of that risk. So that's stock number two. So stock number three, I chose Facebook. So I think Facebook was super undervalued before all this even started. So I think before all this started, they were trading at a forward PE ratio of under 20, which is already pretty low in my opinion. But this recent crisis has dropped Facebook stock a lot along with the rest of the stock market. And at these price points, I think that it's almost like a no-brainer, right? Facebook is such a huge company. And like a lot of other stocks on this list, Facebook has a ton of cash. So they have $54 billion of cash and they only have $11 billion in total debts. So again, it's one of those situations where there's a lot more total cash available than total debts. And if you look at the growth prospects of Facebook, it's like the first stock that we talked about, Google, right? So as more and more people stay home, what are they doing? They're going on Facebook, right? They're going on Instagram. They're vlogging about their quarantine experience. And I think Facebook is just going to do just fine if there is a recession, because I think for companies like Facebook and Google, where they rely on advertising to make most of their money, well, when advertising budgets fall, where are advertisers going to go? They're going to go online, right? Because that online gives you by far the most bang for your buck. So, cable TV ads and traditional ads are more expensive. So if you only have a limited budget, then you might want to pick advertising platforms that reach the most amount of people for the least amount of cost. And I think digital is the way to go for that, right? So if you buy a billboard, how many people are going to realistically see that? If you buy an ad on cable TV, I think cable TV is dying, right? So I think in general, it's just a better use of your money if you use a digital platform, and Facebook is there to help advertisers do that. And if you look at the growth of where the attention or where the engagement is, it's all on Instagram, right? So a lot of people, I think they don't know that Facebook owns Instagram, they're like, "Oh, I hate Facebook. Facebook is so boring and it's for old people now. I'm gonna go on Instagram." Well, uh, newsflash: Facebook owns Instagram as well, and Facebook also owns WhatsApp, which is I feel like they haven't really monetized WhatsApp at all. So if they start somehow monetizing WhatsApp and trying to make a profit off of it, that would grow the revenue of Facebook by a lot because WhatsApp is just currently it has a lot of users, but it's currently an untapped resource. And as well, I'm not sure if you guys remember this, but Facebook a while ago bought Oculus, which is a VR company. So they're doing stuff with VR too. So I haven't seen any news of how well that's panning out or how successful their bets are, but I think if VR becomes a big thing in the future, then Facebook could be a play on VR as well, because they are one of the biggest companies in the world, right? So they have the enough cash to just push through. So if they want to do something with VR, they want to do a project, they have the capital to do so. Versus other companies, they might not be willing to contribute as much money or be willing to bet as hard on a project or something new if they want to try it. So I think that that could be potentially another growth aspect of Facebook. Now, for stock number 4, I chose Berkshire Hathaway, ticker symbol BRK.B. So, and this is Warren Buffett's company. So, frequent viewers of this channel would know that I talk about Warren Buffett quite a lot on this channel. And there's good reason for that, right? So before all this outbreak caused all this crash, Warren Buffett was actually loading up on cash. So in the latest report, according to Yahoo Finance, Berkshire Hathaway has $128 billion in cash. So Warren Buffett obviously knows the game. He's been in the game for the longest time, and he's called the Oracle of Omaha for a reason, right? So I felt like he probably didn't know that there was going to be this virus outbreak that caused the stock market to crash, but he's always prepared for a recession when one hits, right? So he put himself in a great position to take advantage of a recession like this one. So Berkshire Hathaway, his company, is loaded up on cash right now, and I feel like he's probably deploying a lot of his cash right now to buy stocks, just like I'm doing, and just like you guys are probably doing. Although, granted, I don't have as much cash as Warren Buffett, unfortunately. But hey, I've only been in this game for, I don't know, like 5 years, maybe even less. And Warren Buffett's been in for how long? And he is one of the best investors in the world. So, when you're buying Berkshire Hathaway stock, I feel really confident in putting my money with Warren Buffett and just sort of letting him invest it for me, right? Because if you look at the portfolio of stocks that Warren Buffett owns in Berkshire Hathaway, it's sort of like an index fund. So it's pretty well diversified. And I think you're just buying a better index fund when you buy Berkshire Hathaway because it's got the seal of approval from Buffett himself, right? Now, I'm not saying that Buffett is going to be right on every single aspect. So obviously he could be wrong, and he was wrong on some of the stocks, right? So he bet on Kraft Heinz, which crashed pretty hard even before the whole outbreak caused the stock market crash. So he does have bad bets as well. But the thing is that he does have a lot more good bets than he has bad bets. So I feel like that is one of the best companies that are positioned to handle a recession because that's literally what Warren Buffett is known for. Now, unfortunately, I can't afford Berkshire Hathaway A, which is their Class A stock, which he's never split and it's hundreds of thousands of dollars each. But there is a way for common investors like you and me who don't have hundreds of thousands of dollars to throw around to still buy into Berkshire Hathaway stock. And that's because you can buy Class B shares, which is BRK.B. So those are, I think now it's like $150, or I can't remember the current price. It changes so fast, but it's a lot cheaper than it used to be. So for the low price of less than $200, you can start buying Berkshire Hathaway and own a piece of Warren Buffett's company. Now, for stock number 5, I chose Costco, ticker symbol COST. Now, I think Costco is one of those companies that they have the same amount of cash as they do total debts, which is around $8.7 billion. So Costco maybe doesn't have as strong of a balance sheet as, say, like a Google or like a Facebook. But I think that throughout this whole outbreak, as people go to Costco to just load up on supplies, their sales are actually going through the roof. And if you look at a price chart of Costco, you'll see that their stock hasn't actually crashed by that much ever since the entire outbreak started. Or at least it hasn't crashed as much as the entire stock market as a whole. So they've actually weathered the storm very well. And even before the whole virus thing started, this might be kind of anecdotal, but every time I go to Costco, it's always full. So I try to go to Costco once to get gas before all this outbreak started, when it was just normal times. And even then, the lineup was almost on the street. So you almost couldn't get into the gas station because the lineup was so long that you would literally have to stop in the middle of the street, which is illegal, by the way, to try and get into the gas station. So you almost literally can't get into the gas station. And every time I go to Costco to shop and everything, it's just full of people. And every time I spend like, I don't know, $300 or something like that when I go to Costco. So Costco is such a great business. And I just think that this whole virus outbreak actually has given them a great boost in terms of sales. So all the cashiers of all the grocery stores that I know people that work in the retail industry and like grocery stores and stuff, and they all tell me that they've never seen anything like this, right? Their sales are just through the roof. The lineup is like super long at every grocery store right now. So I think that Costco is doing just fine amid all this outbreak. And if you want somewhere to stash your money, forget gold. Just put all your money into Costco stock at this point, honestly. And I think even in the long term, even after this whole virus thing blows over and the sales start to drop back down to normal levels, I think that it's still a good long term bet. Because of just how strong the business is. And I think the business model of Costco is that they sell things in bulk, and they sell things super cheap, obviously. And it's set up in a way that Amazon can't really compete with them at scale because Costco sells a lot of food and perishable items. And I just don't see Amazon being able to sell a lot of perishables in the same way that Costco does anytime soon. Amazon is trying to push into the grocery business with their acquisition of Whole Foods and their Amazon Go stores, but I just don't think that their scale is nearly big enough to really compete with Costco in a meaningful way right now, at least. And in the future, I think Costco just will still have an advantage when it comes to groceries and perishables over e-commerce platforms like Amazon. So I think that their business edge is not going anywhere, and I feel very comfortable investing in Costco for the long term. So anyways, those are the 5 stocks that I'm buying. Again, it's not a recommendation that you should buy any of these stocks. I'm just telling you what I'm doing. And once again, be sure to hit the like button if you like this video, and be sure to subscribe if you like the series. And also don't forget, I have a book. It's called Financial Independence Theory, and the link is in the description if you're interested. And with that being said, I'll see you guys in the next video. Bye-bye.